This morning, Citigroup downgrading the U.S. to neutral, saying mega-cap growth is set for a pullback. And the recession risks still linger. The bank also saying European markets are trading at a discount and upgrading to overweight, attributing that move to a weaker dollar and stimulus from China. Joining us now, Greg Branch, managing partner at Veritas Financial Group and a CNBC contributor. I just didn't even like the way we said that, Greg. Did you hear that? Downgrading America. It's like, what? I guess they meant downgrading. They better have meant that, because I don't appreciate that, downgrading American stocks. Just that aside, do you agree with that to some extent? Are there global opportunities that you think are more attractive?
Well, I agree with some of it, and I disagree with some of it. I actually think that any critique of megacap is based on a valuation perspective, based on a multiple perspective. And if what I think comes to pass, I don't think that's going to matter, Joe. I think that as we get into a contraction in the back half of this year, and as we start to come to grips with what 2024 looks like, folks will be searching for opportunities where there's going to be earnings growth. And at the end of the day, the megatech will give you earnings growth next year, and relatively strong earnings growth. And it will be one of the few places that you'll be able to find it. And so I think that the multiples will start to matter less when the earnings growth proves to be slim pickings.
Do you think, Greg, I don't know whether you saw Tom Lee, but he thinks we're going to have a friendly CPI number for a variety of reasons on Wednesday. He thinks that's going to reverse some of the negative sentiment from those strong jobs numbers last week that got people thinking the Fed was going to go higher for longer. Is that on your radar? Is that a possibility that CPI is a market-friendly number on Wednesday?
I didn't see him this morning, but Tom and I argue about this every month. And so I'm certain he probably said it'll be 3%. And it just depends on which number you're paying attention to. If what you're paying attention to is the headline number, then yeah, that might give us a feel-good few minutes. But if what we're paying attention to is core is likely to rise for the 8th or 9th straight month in the 30 to 40 basis point range. And I think that that's what the Fed cares about. The Fed doesn't care about the fact that energy, which is somewhat beyond our control, has contributed to a lower headline number. The Fed doesn't care about the fact that the base effect is doing some of the work here. What the Fed cares about is that the products that we have to buy every day are still going up in price, and that they haven't been able to make traction against that in quite some time, quite frankly.
Yeah. No, he was talking about core, and he said it would indicate 2.5%. Now, this is a guy, though, Greg, who was bullish right at the beginning of the year. He's up at 4,800. If he's right about this, too, then I'm going to have to start listening to him, and I'm going to start doubting the things that you tell us all the time if he's right about that. But we're going to get a near-term test on Wednesday. You don't think core will be cool this time?
No. Core will go up another 30 to 40 basis points, as has been our recent history with it. We had very strong. Go ahead.
Oh, no, I was just going to say, do you have a year-end target now? Will it be below where we are right now? Will we have a bad second half, in your view?
I think we will. I am at 3,000 is the year-end target, almost the same as where I was last year.
For much of the time. Okay. All right, Greg Branch, this is fun, though, because I told Tom, that it's a crazy call, a weak call, 1 week call for 100 points on the S&P. I go, we're going to know in a week. And we'll also know for the CPI. We'll see what happens on Wednesday.